Good morning, everyone, and welcome to the Quantum Leap Futures morning leap session for Tuesday, April the 19th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to the trade levels and our targets and our hypotheses for the day. This is a subscription room, so if you're interested in checking us out, I'll put up my contact information in just 1 second. Before I do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so here's my contact information. There's no blog, there's no website. This is not a commercial venture. If you want to come in and check us out, send me an email at quantumleapfutures@gmail.com or send me a Skype request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. If you like this video, there's over 300 days of them up on YouTube. Just check out Quantum Leap Futures. Do a search on YouTube. And if you like what I do, follow me on Twitter at Crazy2. Okay, so I think the most important thing is we're sitting here and we're trading in the 90s. We're currently, what are we trading right now? We are trading 2094 and a quarter. Our all-time adjusted high is 2100. Our unadjusted high is 2134. No doubt we're going to test to the 2100s. It's just how far are they going to pull it back and suck in those longs before they push through. But each morning I like to take a look at the market macro using a candlestick chart, a 9 EMA and a 20 SMA. I'm looking for slope and separation. And then where the trend has been violated or challenged. And you can see we've had this beautiful trend, and then in the end of the last year we violated the trend, then took it back into the end of the year. We fell back below the 9 and the 20, and now April and March are currently above the 9 EMA. We got a possibility of a continuation pattern. Going to the weekly, you can see we've had this parabolic move, 10, 11 weeks of this just absolute rip to come up and test these new highs. There is a naked cross down here. There is slope and separation. The trend is very much intact on the weekly. On the daily, same thing. You can see we have had this strong trend, came back, tested the 9 and the 20, and then got a continuation pattern, and here we are getting slope and separation to the upside. On the 4-hour, same thing, strong trend, challenge, take it back, continuation, slope and separation, trend is intact on the 4-hour, same thing on the 1-hour, same thing in the 30-minute. We are starting to see a little bit of a challenge here to the trend on the 30-minute, below the 9 coming down, testing the 20. I'll be watching this level right here, down here, as important area this morning, 2086, 2087. But the trend is still intact, even though it's being challenged. On the 15-minute, we have violated the trend and we've rolled over. We've got a bit of a head and shoulder pattern showing up on the 5 and the 15-minute. You can see there's the left shoulder, there's the head, there's the right shoulder. If we take a look at what this looks like, I would use this as my neckline. So just a quick approximation of where that would take us. The main target 2092, 2093, extended target down here to 2091. So just keep an eye on that. And then you can see it again on the 5-minute here too. There it is on the 5-minute. So trend is starting to roll over on the 5-minute, but just keep in mind 2100 is our all-time adjusted high, and we've come up within 1.5 points of that and come back down. All right, taking a look at the big structure. Obviously, we're going to get, we had a Very strong bullish engulfing day yesterday with that big move up. We still have this gap down here, down in the 2064 to 2058.50. We're going to create another gap here above the high from yesterday at 2088.50. So we are going to get a possibility of a gap and go. Could fill in the gap and come back to this 2089 and a quarter CHVN and test it. The 2086, remember we were talking about, that is going to be a key line in the sand. Below that, I think we get a bigger move back towards the 2075, 2078.85 or 2078.50 area if we get below this 85.75. So taking a look at what happened overnight. Overnight, we came down. We had that Globex gap again, and that Globex gap did get filled. Then we kind of went sideways most of the night. Then we got into the European session, and the Europeans took us up. We have a P-shaped profile with a Globex VPOC at 2096. There's an LVN right here at the 2092.50. That's right near that 2093. 2093.50 is the Globex VWAP. So if we start moving our numbers over, our overnight high, which I expect to get taken out, is 2098.50, and our Globex low is 84.75. And our Globex VPOC, which is not likely to change, is 2096. Things I didn't do. And I got to do now. So what is our week high and week low? So we know what our week high is. It's 2098.50. And our week low is that 58.50. So based on a weekly ATR of 71,675, 2058.50 plus 71,675, our weekly ATR can't be right. 2058.50 plus 71,675 is 2130 is our weekly ATR upside target, which is right near that 2134, which is the unadjusted all-time high. $20.30 and a quarter. And based on the overnight high so far of 2098.50 minus the 71,675, 2026. Sorry, I was late getting to my desk this morning. Okay, so not really worrying about the downside right now. All right, and then we have an LVN here at the 2094. This out of the way. I'm going to be using this 2093.50 2150 to 2094 as a trade area. Our daily ATR target is 2170. So off of the overnight low of 2084.75 plus 2170, 2106 is our daily upside ATR target. 0650. And then off of our high, $20.76. $75. All right, and there's really nothing else that I can use there for information. So let's just $93.50 is that. So that's perfect. All right. Just wanted to check that prior area. So we're currently trading 94.50. My main hypothesis this morning is for a pullback into the 87 area, possibly even come down into the 78 area, suck in the shorts, and then turn around and grind up through and go make a new all-time adjusted high with a check into the 2100s. So the way I'm going to look at this, below the 93.50 area, I'd be looking for a move down to test the range and the value area high. Possibly, there's a lot of targets down here in this 87. You've got the naked close at 86.75. You've got the naked VPOC at 87 and a quarter. You got the value area high at 88 and a quarter, and the range high from yesterday at 88.50. I do expect this to be challenged, maybe even dip down through to the 81.75, the top of this double distribution, and then a move up into 98.50 and into the 2106, 2110, the rule of 10 to the upside. Below the 81, I'd be looking for a move down into targeting the 2078.50. And then it gets pretty thin below there. I'd be looking for that 75.50. That's that 3-day microcomposite VPOC down here. And then if we don't bounce from there, I'd be looking for and targeting the 73.75. Then the range low from yesterday. Key line in the sand today is going to be the maybe the 75. Because if we don't bounce off there, I expect a bigger pullback. We've got some naked closes down here. We got that 63 and a quarter, 63.50, the composite VPOC at 61.50, and then we've got that 58 and a quarter, 58 and a quarter, and then we got this 56, 55 area, and down to 52. To the upside, of course, we've got the overnight VPOC at 96, the overnight high. I'd be targeting the 2102.50, and then the 2106.50 and 2110. There's not much to gauge once we get up here. So if we get into the 2100s, I just try to see how far they extend in, and I wouldn't try to short the 2100s. We are going to have this 2100 as a trade area as well. So my main hypothesis is to open auction out of range, come down into the upper distribution between the 85 and the 88.50, find responsive buyers down there, or initiative buyers I should say, and then take us back up through into the 2100s and possibly hit that 2106.50, maybe 2110. Secondary hypothesis is that we test into the 2100, dip inside of it, and then fail, and come back all the way through down into the 81 to 75 area. That's my secondary hypothesis. And then the third hypothesis is to open auction out of range and just chop around between the 2090 and 2100 as we're getting ready to dip into the 2100s and test them. Currently, right now, there's not a lot up here to guide us, so it's going to be tricky. You're going to have to use short-term, structure and trade off of that, because there's not a lot of structure to guide us here. Currently, we're above the Keltner center line at 2093.25. A test of the upper Keltner is going to take us up into the 98.75, take out that overnight high, and take us into the 2100s. Below the lower Keltner, move down to the lower Keltner, will take us to the 87.50, and a close of the naked VPOC and the naked close. So that's what I'm looking at. I know it's a bit of a quick session, but just late to my desk trying to get going myself here. So that's going to complete our session. As always, trade well, trade safe, and we'll catch you on the flip side. Okay, I'm going to close this down.